The genuine investor in common stocks does not need a great equipment of brain and knowledge, but he does need some unusual qualities of character. It should be remembered that a decline of 50% fully offsets a preceding advance of 100%. Mr. Market's job is to provide you with prices. Your job is to decide whether it is to your advantage to act on them. You do not have to trade with him just because he constantly begs you to. Successful investing professionals are disciplined and consistent, and they think a great deal about what they do and how they do it. In the old legend, the wise men finally boiled down the history of mortal affairs into a single phrase: "This too will pass." Never buy a stock because it has gone up or sell one because it has gone down. It requires strength of character in order to think and to act in opposite fashion from the crowd, and also patience to wait for opportunities that may be spaced years apart. The intelligent investor should recognize that market panics can create great prices for good companies and good prices for great companies. Buy when most people, including experts, are pessimistic, and sell when they are actively optimistic. The essence of investment management is the management of risks, not the management of returns. Never buy a stock immediately after a substantial rise or sell one immediately after a substantial drop. The true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operation results of his companies. Buy not on optimism, but on arithmetic. Losing some money is an inevitable part of investing, and there's nothing you can do to prevent it. But to be an intelligent investor, you must take responsibility for ensuring that you never lose most or all of your money. An intelligent investor gets satisfaction from the thought that his operations are exactly opposite to those of the crowd. Before you invest, you must ensure that you have realistically assessed your probability of being right and how you will react to the consequences of being wrong. Individuals who cannot master their emotions are ill-suited to profit from the investment process. The intelligent investor is a realist who sells to optimists and buys from pessimists. In the short run, the market is a voting machine, but in the long run it is a weighing machine. The market is a pendulum that forever swings between unsustainable optimism, which makes stocks too expensive, and unjustified pessimism, which makes them too cheap. The intelligent investor is a realist who sells to optimists and buys from pessimists. Thousands of people have tried, and the evidence is clear: the more you trade, the less you keep. A great company is not a great investment if you pay too much for the stock. Investing isn't about beating others at their game. It's about controlling yourself at your own game. To be an investor, you must be a believer in a better tomorrow. Successful investing is about managing risk, not avoiding it.